Hello, everyone. Welcome, guys. Welcome. This is our Learn to Trade for Beginners class. So, welcome, everyone. Thanks for taking the time on Saturday morning, all right, to go through some uh, beginning traders information, all right. So, we're not going to keep you guys long. I know it's Saturday morning, all right, but if you're brand new to trading, already you've been trading for a few weeks, haven't traded at all. This is the webinar for you guys. Okay, so I'm gonna go through some information. My name is David Stephenson. All right, I with Monster Trading Systems. All right, so if you look here on your screen, Monster Trading Systems. All right, I've been trading for over 25 years. Right, 2013, we started our company, Monster Trading System. So when you guys get a chance, just go online, www.monstertradingsystems.com. We have a lot of good information there on the website. All right. So as you come in, guys, go ahead in the chat. Just tell me how much experience you have. All right. So if you've got, again, just a few weeks, haven't traded before, even if you've got several years of trading experience, but still trying to figure things out, this webinar is for you guys. All right. So we're not gonna. I'm gonna take long going over this information. I know it's Saturday, but there is some information I want to get to you guys so you can start your trading career in a successful way. All right, so let's go right into it. Again, David Stephenson, go online, look for some information, read about what we do. All right, so the first information I would like to give you guys as new traders, right, is this book. All right, Trading in the Zone by Mark Douglas. All right, so again, Trading in the Zone by Mark Douglas, how to master the markets with confidence, discipline, and a winning attitude. All right. When we do coaching, and I do one-on-one coaching throughout the week with traders, I highly recommend this book. All right. It's so important, guys, that we give this book free of charge to our one-on-one coaching students. So Trading in the Zone by Mark Douglas. All right, all about your mindset, and again, understanding how the markets work, how trading work. All right, you don't have to run out and buy the book. Right, it is on YouTube, the audio book, so you can go on YouTube and just type in Trading in the Zone. It will come right up, and start listening to that information if you're serious about trading. All right, so Trading in the Zone by Mark Douglas. All right, very good a resource here. All right, so when you're done with the webinar, go online. Don't do it now. All right, go online, start listening to that book. All right, few more resources we provide. All right, with our coaching, and we recommend you can go on Amazon and also get this. It's you have to pay for it, not a big deal, but Ultimate Guide to Swing Trading, Ultimate Trading Risk Management Guide, and the Ultimate Guide to Technical Analysis. All three very important, all right, when it comes to trading. A lot of traders get into trading, they always ask me, well, David, how do I enter the trade? Right? What do I trade? All right. How do I enter? What do I trade? And most importantly, when do I exit the trade? All right. So we use technical analysis. All right. So it's not based on what we feel or what we think. All right. We use a very defined process. All right. Through technical analysis. All right. Part of that technical analysis is support and resistance. So we'll talk about support and resistance also. All right. But technical analysis, we don't use fundamental analysis. We assume that the fundamentals is built into the price. Okay. So technical analysis, ultimate trading risk management, very, very important when it comes to trading. All right. In trading, guys, what we do is manage risk. Everything we do in trading is to manage risk, manage our losses. All right. And then we look for ways to increase, right, improve our upside potential. That's what we do as traders. Okay. So we always look for ways to manage risk. There are different ways to manage risk. I always say getting the right information, the knowledge is perhaps the first way to reduce risk, manage risk. Okay. And swing trading, right? Ultimate guide to swing trading, right? Three phases, three types of trading, I would call it, right? Swing trading, where we stay in that trade overnight. We stay in that trade. If the trade works out, right, a day, 2 days, 3 days, a week, right? Few weeks if we're lucky, right? Day trading, where we're trading intraday, where we enter the trade and exit the trade, right, within the day. And then position trading, where we're staying in that trade. If it works out, several weeks, several months, even several years if we're lucky. All right. Most of you, when you come into trading as new traders, as beginning traders, right, the goal is to get involved with swing trading. It's perhaps I wouldn't say it's easier, but it's perhaps the simplest way to trade swing trading. All right. And just think of swing trading as I wouldn't call it the lazy person's way of trading, somewhere in between. They're trading really, really, really fast. All right. And you have to be somewhat, I wouldn't say glued to the screen, but you have to pay very, very close attention to your trades intraday. All right. We usually use a smaller time frame for day trading, swing trading. All right. So I would say day trading 1 minute time frame, 5 minute time frame, 15-minute time frame. All right, no more than 30-minute time frame. Swing trading, 60-minute, 240-minute time frame. Okay, you notice how the time frames go up. And when you get into position trading, longer term trading, we trade on a daily time frame. Meaning every candle, guys, from open and close. Some traders, new traders, get confused about that. All right, but every candle from open to close, right? That data from open to close on a daily time frame. So from the beginning of the day to the end of the day, that's a daily time frame. Forward time frame. All right. So every 4 hours from open to close. All right. From open to close every 4 hours. That's a 240-minute time frame or a forward time frame. 60-minute every hour. All right. So just think every hour we might have to make a decision whether to enter or exit the trade. So as you move up in time frames, all right, the slower we can slow things down. All right. That's why day trading is extremely difficult for new traders for beginning traders, which is what most of you are. All right. Beginning traders, we have to enter again. That could be a 1 minute, 2 minutes, right? 50-minute time frame. So imagine every 5 minutes, you might have to enter or close a trade. So that's why day trading, right? Or we call it intraday trading or scalping, very, very, very difficult because most of you, right, will be working, right? You have your careers, your jobs, and you're not full-time traders yet. All right. We do have full-time traders, but they started slow and they had to get to that process. Okay, just understand, right? That's why these guides here, ultimate guide to swing trading, risk management, and technical analysis, very important. And we provide that with our coaching. As I mentioned earlier, the number one question I get from new traders is, hey, David, where do I enter the trade and where do I exit the trade? All right. Or how do I enter? How do I exit? Okay. We do that by support and resistance. Now, these screens here, guys, they're in your handout. All right, you can download them. I always tell traders, especially the few I'm going to go through there, this one, and then the next couple of slides, you definitely want to have them laminated, and I'll tell you which ones to have laminated. Print out, have them laminated with you. You want to remember these slides here. Okay, all your decisions when it comes to trading, whether you're brand new or seasoned trader, doesn't matter. All your decisions will start and end with support and resistance. All right. So think of support and resistance. Now, notice here, support and resistance, the keys to your success. All right. The keys to your success. As brand new traders, you guys have to know this. You need to know this information. All right. Not only do you need to know it, but you need to execute, right? You need to execute using this information. So resistance is made. Resistance is made. If you look at the chart here, the green line, when price can't move any higher. All right. So let's say price makes a high. Price could be your stock, your crypto, or whatever. Makes a high, can't go any higher. All right. Doesn't go on forever now. I know we would like it to, but doesn't go on forever. So it makes a high, can't go any higher, stops. All right. Price makes another high, doesn't go any higher. Now you've got resistance. All right. Now you've got resistance. Now, what I'm going to do here is this. Let's see if we can do this. Hold on. I'm going to do something a little differently today. All right. We're going to bring in a whiteboard here. Let's see here. All right. So I'm going to draw this out. All right. So here is, let's change the color here. So we're going to bring in a green line here. This is your resistance. All right. And we're going to bring in a red line here. This is your support. And here is the price. So here is your stock or your currency pair or whatever. All right. When the price gets to this area here, so it went from the low here to the high here, that's a high, right? If the price comes back down like this and makes another move higher, now you've got resistance. So you have resistance here and resistance here. All right. Now you have support. The first time it reaches a low is not support. All right. If it reaches that, comes back down and reaches that area. So let's say the low here is $50. All right. Now you've got support. All right. The high here is $100. Now you've got resistance. All right. And the reason why we need to know this information is because the buyers, there's a battle between buyers and sellers. So between this area here, between support and resistance, between the $50 mark and the $100 mark, right? Some retail traders like us, but most importantly, guys, hedge funds, big institutions, all right, big money managers, right? They're looking for liquidity or a better price before they move the price. So you will notice that price will bounce back and forth between support and resistance, just like this here. All right. As traders, we need to be aware of that. All right. That this is what's happening. Okay. Now, some traders will trade between support and resistance. So they will trade, they will buy here at support, sell here at resistance, buy here at support, sell here at resistance, and so forth. All right. Just know that. Can you trade this? Absolutely. This is called a range trade. So you can, price is ranging, and you can definitely buy here and sell here, buy here and sell here. Some traders will short. They'll short here and buy to cover. It's what we call it here. All right. So you can trade that area here. All right. And you can certainly do that, right, if the price is ranging or what we call consolidating. Okay. The best way to trade, though, that we recommend is when the price breaks resistance. So just understand there is a battle between buyers and sellers in here, right? The big institutions are looking for liquidity, all right? So they're looking for a lower price to then take the price higher. All right. So that's the big institutions. That's what they're doing. That's their job, to get a lower price. Our job is to anticipate, know what they're doing. This is why support and resistance is so critical. All right. Our job is to know the game that they're playing. All right. Anticipate. All right. Wait for the big institutions to buy. All right. So that's what we're waiting for. We're waiting for the big institutions to buy, break resistance, and then we'll enter when the price break resistance. Understand that the majority of the time, right, the market, whether it's the equity markets, your stock, your crypto, right, your Forex pair, your futures will consolidate. So a large percentage of the time, guess what? Price is doing this. Okay, so we need to understand, stay out of this, wait, right? When the buyers get in, which is the big institutions, and then we buy. Okay, and all we're doing, because we can't move the price, we are small traders. Even in large volumes, we are still small in comparison to the big institutions. We need to wait for them to decide what to do, and then we just piggyback, follow them. Okay. All right. So write this down, please. And you should have these slides again in your handout. Okay. But the way we trade when we buy, and again, this is the number one concern new traders have, beginning traders have, is, David, where do I buy? Where do I enter? So you're going to enter, always enter when the price breaks resistance. So write that down, please. I'm going to buy, enter when the price breaks resistance right here. Okay. You're going to buy when the price breaks resistance. You're going to sell when the price breaks support. So let's say, for instance, the price breaks resistance, comes back down. This is support down here. All right, right here. You would sell, exit, close the trade here. All right. So here is resistance. Here is support. You bought here. You would have sold here when the price breaks support. Okay. Let's say the price moves higher. All right. Hold on. Let's say the price moves higher up in this area here, right? Then you would get out of the trade there. Okay. So just remember, we're gonna sell on a break of resistance. All right. Buy on a break of resistance, sell on a break of support. Buy on a break of resistance. Write this down. Buy on a break of resistance, like here. You see a support and resistance chart. We are always going to buy on the break of resistance because the buyers are in control. We are going to buy on the break of resistance because the buyers are in control. The big hedge funds, institutions, market maker, money managers. Okay. We are going to sell when the price breaks support because the sellers are in control. Not us. We can't control the price. So we just follow the price action by the big institutions. Okay. Can we trade between support and resistance? Absolutely. But we need to know the condition of the market, condition of whatever instrument we are trading. We need to know, is it trending or is it ranging? And we can trade between support and resistance. Just know that our profits are limited. Okay. We need those buyers to come in when the price breaks resistance. Okay. Now, from support and resistance, we go into the 4 market phases. From support and resistance, we go into the 4 market phases. All right. So if you notice there, That chart, again, I recommend you have it in your handout, print it out. If you're serious about trading, laminate it. All right, keep it with you. Take it to memory. Okay? All right. This is your roadmap. All right. This is your roadmap when it comes to trading. We can take someone without any trading experience, teach them this information, and within a few weeks, guess what? They're trading, right? They're trading better than most. They're not making a lot of money, but they're trading, they're understanding how the markets work. All right. Even with this simple information, you start to understand how things work, and it's not foreign to you anymore. Okay. So support and resistance, that's where we start. And then we go into the four market phases that every trader must know. You guys must know this. If you're here on a Saturday morning, I assume, right, you're interested in trading, right? You want to trade, you want to explore this amazing industry. Okay. So the four market phases that every trader must know. The first phase that you guys must know is the accumulation phase. Phase one, the accumulation phase. Phase two is the markup phase, and I'll go through each one. Phase two is the markup phase. Phase three is the distribution phase. Phase four is the markdown phase. Again, phase one, the accumulation, four market phases that every trader must know. You guys must know this. Accumulation phase, phase one. Phase two, the markup phase. Phase three, the distribution phase. Phase four, the markdown phase. All right. So accumulation phase, phase one. That's what we just looked at. That's where the price fell, right, from $100 to $50. All right. The buyers and sellers fighting for position. All right. We don't trade between support and resistance. We wait patiently for who? For the buyers to now break resistance. Now we know that the buyers are in control. Big institutions, big hedge funds. All right. Once the price breaks resistance, you see your lines there. You see the accumulation phase. Price breaks resistance. Now we're in the markup phase. So that's where we're going to buy. Price breaks resistance. We are now in the markup phase. You can call that the trend, the uptrend or long trend. Now we're in the markup phase. So now we're solid in the trade. All right. Notice where it says reaccumulation. As new traders, right? If you've never done this before, right? We don't know what's going on. We assume that the price is going to go up forever. But no, it's got to stop, build new support and resistance levels, and then we wait in the trade. So we're still in the trade and we continue to wait. See what happens if buyers are going to come in or sellers are going to come in. If sellers come in and the price breaks support, what do? We close the trade, we exit the trade. Not because we want to, because now the sellers are coming in, they're selling, we need to sell also. All right. However, if the price breaks resistance and we have new buyers entering the market, that's called the reaccumulation phase. All right. So reaccumulation, new buyers, right? New buyers. Think of accumulation, guys, like a squirrel. I use different analogies, right? But like a squirrel, gathering nuts, gathering, accumulating, you're gathering. All right. You gathering, you building positions before you move the price higher. Okay. So that's what's happening in the reaccumulation phase, right? New buyers are entering the market. That's when we get excited. Okay. Because now they push our price higher and we need new buyers to push our price higher so we can eventually get out. All right. It's a game. And we want to be on the winning side of the game. Okay. When the price can't go any higher, that's called the distribution phase. Distribution phase, we're not making any new highs. Price has stabilized at the top. All right. Price breaks support. Okay. That's now the distribution phase. Okay. The buying is done. No more buying. We can't do any more buying. All right. However, if the price broke another resistance level, that distribution phase would be reaccumulation phase. Okay. And that reaccumulation phase could keep going. But in this case, right, price broke support. You guys see the red lines here? Red is sellers. Price broke support, distribution phase, right? We're out. We would have closed the position when the price broke support. So we would have bought when the price breaks resistance, sold when the price breaks support. Okay, we'll be out of the trade. Okay, so phase one, accumulation. Phase two, the markup phase. We're in the trend phase. Within the markup phase, we've got reaccumulation. New buyers are now entering the market, all right, to push our price even higher. When it can't go any higher anymore, price breaks support, we close the trade. All right, that's 3, distribution. Now we're in the markdown phase. We're totally out of the market. Sellers are coming in heavy. You have redistribution phase within the markdown phase. All right. When the price breaks support, we have redistribution phase, meaning new sellers coming in heavy to push the price even lower. Similar to reaccumulation, but it's the opposite. So we have to be aware of when buyers are entering so we can buy, when sellers are coming in so we can sell, protect our profits, get out of the trade. It is that simple, but it's not easy. Okay. So if you guys have this information, right, you take it seriously, you'll be farther ahead than most individuals out there looking to trade. All right. And then it starts all over again. So there's only 4 phases, guys. All right. Only 4. That's all you have to know. All right. Memorize and follow that process every day. This is what we do as traders every single day. Every single day. So you should be able to look at a chart, a price chart, and know, okay, I am in the accumulation phase. All right. I'm in the markup phase. All right. The stock that I'm looking at, it's in the distribution phase. All right. Or the redistribution phase. Or guess what? It's setting up to break resistance. All right. Or it's setting up to break support. You have to know this. All right. You have to know this. So I'm glad you guys are here getting this information, right? You know more than most. And this simple information here will make a big difference. All right. The markets, your instruments that you trade is not as difficult to understand anymore. Okay. And every single market, I don't care if what stock, they all go through these phases. And at any time in point, right, in any period, they will be in one of these 4 phases. Okay, so your job is to know that and then look for those phases within your whatever you're trading. Okay, so accumulation again, markup, right? Within the markup phase, reaccumulation, new buyers. Again, that's when we get excited, right? We need buyers to get out. I know it's different. All right. I know it's different, but it is what it is. We need buyers to push the price higher so we can get out. Okay. Out. All right. After the reaccumulation phase, that's the distribution phase. But just know that that reaccumulation phase can go up If the stock keeps going up or whatever you're trading keeps going up, we can have 4, 5, 6, 7 reaccumulation phase. That's when things are really nice. We can keep adding or scaling up to up with our positions. Okay. All right. And then distribution phase, it's done. The trade is over. We want to get out when the price break support. That's our red line there. Markdown phase, phase 4. All right. Within the markdown phase, we have new sellers entering the market. That's called the redistribution phase. And boy, if we're still in that stock, all right, or we're trading, right, cryptos or whatever, and we're not aware, right, of that redistribution phase, and we still in the trade, and that price breaks support and new sellers come in heavy to push that price lower, we're done. Okay. All right. And what we want to be doing is we want to buy on a break of resistance in the accumulation phase, get out when the price breaks support in the distribution phase, take our profits and wait for the next round of buying, which is the accumulation phase, phase 1, which starts all over again when the price breaks resistance. All right. So just remember that, guys. All right. When we trade, we do I do evening training every evening from Sundays through Thursdays. Every evening, we go through all different types of examples, real life trades, and we follow the same process. Okay. All right. As new traders, this is one of my favorite charts here. It's called trend following, the meat of the trade. The meat of the trade. As new traders, right? Even experienced traders, we always want to get the bottom, the very low price, and we want to get out at the highest price. All right. We want to buy at the very, very low, and we want to get out at the very, very high. And that's impossible to do. It's impossible to do, because if you buy at the very, very low, right, you're still in the markdown phase. And hopefully by now, these phases will start to make sense. Why we need those phases, we need to follow those phases. All right. So if we buy at the very low and the price is in the markdown phase, guess what? It could go much lower. All right. If we close the trade at the very high because we want to get out at the very top price, guess what could happen? The price could keep going higher. All right. So we have to wait for the buyers to come in, which means that we're not going to get the very the lowest price. Right. And that's an issue with traders. Hey, David, it went down to $50. Why? Why can't I get in at 50? Why do I have to wait at $100? Well, you have to wait at $100 because that's where the price broke resistance, which tells us that now the buyers are in control. And they say, well, David, why am I getting out? Why can't I get out at $200 profit? Why do I have to wait, okay, and get out at $150 profit? Well, guess what? Right? The sellers came in at $150. That price could have gone up to $250, $300, $400. Okay. That's why this is important. Otherwise, guys, we are trading based on what we want, and the market doesn't care what we want. Okay. So we have to follow what the buyers are doing, follow what the sellers are doing. Okay. So this right here, I call that the meat of the trade. The meat of the trade. All right. So again, this one here, very important. Print it out, laminate it, keep it with you. All our successful traders, they understand this process very, very, very well. All right. If they don't, they usually don't do well. Okay. So the meat of the trade, the middle part of the trade between resistance and support. That's where we buy. That's where we sell. We don't try to get the whole trade. We don't try to buy at the bottom and sell at the top. That you'll never be able to do that. If you do, you'll be in trouble. Okay, so we want the middle part of the trade, the sweet part of the trade, the perhaps the easiest part of the trade. All right, very good. Now, you guys can tell I'm serious about this. I'm very passionate about this. Okay, I've been trading for over 25 years, teaching traders how to trade this year, 2024, 14 years now. Okay, we do coaching all week long, even on the weekends. After this, I have a coaching to do. Okay, if you're serious about trading, all right. Our traders say this is the best investment that you will make because guess what? You're going to give it to the market, right? You're going to have losses anyway. All right. So get some coaching. All right. So we have different levels of coaching. All right. Beginners, intermediate, and advanced coaching. All right. Most of you, when you come in brand new, you will be in the beginning coaching area where we do 4 coaching sessions for 1 month, 1 hour per week. You need that time to digest that information. Right? A lot of traders will say, "Hey, David, I want to do all my coaching in 1 week." Impossible. There's no way you could do this in 1 week. Okay, you need time to digest, right? Follow our reading information instructions. So 1 hour per week for 4 weeks. Guarantee you by that 4 weeks, you'll be a very different. You look at trading very different than what you thought. All right. Intermediate. I don't recommend intermediate for traders. This is for our current traders who are looking to get some, more knowledge. All right. Take their trading to the next level. All right. And then we have our advanced coaching. Advanced coaching, we do 6 months. I work with traders once a week for 6 months. Okay, once a week. Imagine that, once a week for 6 months. Trading, guys, is like a sport. It is. It's very competitive because you're dealing with other traders. Every time you take a trade, there's another trader on the other side of that trade trying to take your money. Yeah. All right. So every time you have a losing trade, someone else had a winning trade. And every time you had a winning trade, another trader had a losing trade. So it's a zero sum game, right? It's a zero sum game. You don't share in the profits with another trader. So you need to know what you're doing. You need to know what you're doing. All right. So we do advanced coaching with traders who've been with us for a while, looking to take their trading to the next level. So whether they're making $1,000 a week, and they want to take that to $4,000 or $5,000 a week, that's what we do every week. Every week we work with them. All right. All right. Now, we have several types of traders. We have traders brand new, never traded before. Some traders, right? We get them from other firms, other companies where they've had some difficulties, and now they're here and they're trying to do things the right way. Right? We have a lot of success stories. If you guys look in the chat, there's some links. I recommend go to the links. All right, the success stories. We have, I would say, once every we have a lot of success stories. So just go online, like look at their success stories. This is Dean here. This is Dean, one of our most consistent traders. Dean has been with us for, gosh, 2 years now. Fairly new, about 2 years, year and a half, 2 years, and came to us. Had been trading for many, many, many years. Couldn't really put things together, everything together. He came here, very disciplined trader, and his goal was to travel, right? Travel, trade, travel, and near retirement. And we got him going. And I'm so proud of Dean. On average, he does about $5,000. Futures is really the market that he's come to love. does about 5,000 a week on average. Okay, we're trying to get him more, trying to get him trading more, making more money. So he's doing the advanced coaching. All right, he's kind of pulled back a bit because he's got things figured out quite a bit. Okay, not I know 5,000 a week is a lot. No, he doesn't make that every week. Sometimes he makes more than that. Sometimes he makes less. Okay, but very very good trader. All right, and so we got him going the right way. His testimonial video is on the website and with along with many of our other traders. Okay, very proud of our traders. Okay, this gentleman here, Saga, perhaps one of the traders I'm most um, I'm happy for. Never traded before. So just because, guys, you've never done this before doesn't mean that you can't learn it. Okay. Trading is a learned skill. You can learn it. You can definitely learn it. Does it take some work? Absolutely. You have to want it, right? You have to put in some work. So Saga here started trading, never traded before. Look at his setup, right? Imagine going from never trading before within a couple of months. Look at his setup here and has done really, really well. Okay. First time making $617 in one day. Never done that before. Okay. So, and we do these success stories to give you guys hope. Okay. And I know there are a lot of success stories on there on YouTube. Our traders are live, right? They come on board, right? They talk to other traders, right? They talk to new traders. It's nothing more helpful when you talk to an experienced trader, right? Get to uh, qu- question experienced traders that have done it, right? Because guess what? If they can do it, we can certainly do it. Okay. Also. All right. So I just want to say thanks. I know this is a lot of information. Okay. So just take that information. There will be a replay. Okay. So when you guys, the replays are sent out automatically. When you get those replays, when you get those, just listen to them. Listen to them again. Go on our website, right? It's in the chat there. The links are there, right? Go on our website, right? Start listening to those success stories, testimonials, gather your information, right? If you're serious about trading, gather that information. You want to make the right decision, okay, out there. But just remember that support and resistance, that's key. Support and resistance, the four market phases. You guys spend some time here, all right? Understand this. Understand support and resistance. All right. This is your foundation. You have to know this. There's no getting around this. Okay. Now, there are different terms for it out there. Okay. But it all means the same support and resistance. We need to know when buyers are coming in and then when they're getting out. All right. And then obviously the four market phases. Okay. This will arm you when you get into the market and you start trading, right? It's not going to be just a blur, okay? We need to have structure when we trade because we're taking our capital, our money, our hard earned money when we go to trade. So there's something that happens when we trade our money, okay? That all the rules go out the window, all the rules. All right. We get very emotional because we don't want to lose money. That's our personal money. So we need to have structure. All right. We need to have the information, have structure, manage a process, a systematic approach. Okay. It's so critical that we build a trading system. That's why we call monster trading systems, because a lot of traders, it's very, not just traders, individuals, right? It's very, very difficult to manage, all right? Manage that process when we're using our capital, our money that we could use for anything else, groceries, clothes, right? So when we take our money, I always tell traders, hey, if you enter the trade and you lost $100, would you take another trade? And sometimes I would say about 70% of them would say, yes, David, I'll take another trade. If I took on the first trade, lost $100, I would take on the second trade. And I said, well, let's say you took on the second trade and you lost another $100. Would you take on a third trade? And then they start to think about it. Okay, I would say about 40% of the traders will take a second trade and lose. So now you've lost $200. $200, guys, it's gone. It's not coming back. All right, and I ask them, hey, now, would you take the third trade? Now, this is the third trade now. And they really start to think about it, right? Do I really want to take a third trade and lose another $100? And guess what? Most of them stop at the second trade. The second trade. But that's what trading is, right? We can lose 3 times in a row, 4 times. We could lose that, right? So we need to understand, right? If we're going to take a loss, which the majority of the time we are going to have losses, perhaps 60, 70% of the time we are going to have losses. If we don't understand how trading works, then guess what? We will not have success. So we don't care about the losses, is how we manage. Remember, we talked about risk management, right? We want to manage those losses. So I'll give you guys a little tip here. The way we win at trading, the way we make money in trading, is we use the game of math and probabilities. Meaning we can have many, many losses and very few wins and still turn out really, really well, still win at trading. And the reason is we want to keep our winning trades, our losing trades small. So when we lose, we want to lose small amounts. Small amounts. So we want to get out quickly when we're wrong or when the market is wrong. But then when we win, we want to stay in for the maximum profits. Let me repeat this, and you guys remember this. The way professional traders trade, and we teach you how to trade like a professional trader, is that we cut our losing trades quickly when we're wrong. So when the price breaks support, we want to get out quickly. When that selling comes in heavy, we want to be out before then. So we want to take small losses. But then when we're right, we want to stay in that trade for maximum profit in the markup phase. We want to stay in that markup phase, keep pushing higher, all right, for maximum profit. So we can have, and when traders understand this, right, they understand, oh, well, these losses, if I can control the losses and I can stay in my winning trades, I can have 5 losing trades, 1 winning trades, and still win, still do really, 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 really well. Okay? So trading is a game of math. It's a game of probability. All right? And I always say it's a 50-50 chance. All right? It's a 50-50 chance, but if we have that concept where we get out quickly when the price breaks support, because sellers are coming in, buyers are getting out, all right? And then we stay in the markup phase, right? We don't get out when we get a 10% profit. We don't get out when we get 100% profit, all right? We're going to get out whenever the price breaks support, whether it's 500% profit, 1,000% profit, all right? Or a 10% loss, 10% profit, we base our trades on that. All right. All right, guys, I've said enough. All right. Get some coaching. If you want to trade, trading is not for everyone, but if you want to trade, get some coaching. Get some coaching. Get some coaching. It's like anything else that we do in life. Okay. We need help. All right. All right, guys. Take care. All right. Go on the website, right? monstertradingsystems.com. My phone number, email, everything is on here. I'm easy to reach. I do this 7 days a week. 7 days a week. All right. So I'm always available for you guys. All right. Thanks for coming on a Saturday morning. All right. We went a little longer than I thought, but we're right on time. All right. Take care. Thanks for coming. Okay. Bye bye.